Hey, hope you're doing well. This is Edward again, acquisitions.com. I'm an operating partner of a firm, and I wanted to do another video related to a very interesting opportunity for people that have a little bit of a business acumen and awareness and can put a few things together, both in US and Canada. So this is all about buying a private business or buying a business in general. And I'm going to show you why this is a fairly good opportunity compared to everything else you can see out there. So let's get started with some basic things. So let's just look at some data. So I went into ChatGPT and I've typed in how many businesses make more than 2 million in revenue in the US. And the reason for that is I want to see what businesses and how many of them are actually making money. Because I don't want to get into something that doesn't make any money, right? That's the first criteria. So I'm more interested in looking at companies that are making more than 2 million revenue because typically I know that if they're profitable, if they are in between 10, 20% margin, that means that they make in between 200K to 400K profit annually. Well, if you're an owner in a company like that, you're probably going to make decent income for yourself, right? That's kind of the low end of a market, and you could go from there. Now, if you look at the data, there's different sources here, but essentially it gives you an estimated number of businesses by revenue bracket in US specifically. This is based on census data and IRS fillings. So what you can notice is there's a little bit more than 1.3 million businesses up to 1.5 million that are making more than 2 million revenue. Of course, the question is how many of them are actually profitable, but let's assume there's still a lot of businesses that are fairly profitable. There's also 300K businesses that make more than 10 million revenue, and there's also more than 300K that make in between 5 to 10, and then 700K that make in between 2 to 5, right? Which is a good indicator as well. So what this data shows you is that if you would have a business like this, you'd be generating a lot more revenue from day one, a lot more profit from day one. Now, what's the opportunity about? The opportunity is about acquiring these companies. Because what's interesting is a lot of these companies have an owner that is typically looking to exit eventually, either for retirement, through health issues, or they're going for a divorce, or they have some personal issue, and if they want to retire, they want to exit, they want to get out of the business. So there is an opportunity for somebody else to come in with the right experience, right capital, and right understanding of a business model and get in and actually take advantage of this. Now, a lot of people still believe up to this date that you need a lot of liquidity to be able to do this, and that's actually not completely true. You need to really understand how this works so that you can actually take advantage of opportunity. Because at the end of the day, you could leverage capital outside of your own pocket. You can go into private investors and get capital from them and do a deal and still participate in a deal and still co-own the company with that individual or be a co-owner in that business or a co-investor in that business, right? So these are some basic facts. Now, um, if you're gonna scroll down below, I've also asked how many businesses make more than 2 million revenue in Canada, because I want to make sure that again, the Canadians out there that are looking to get into opportunities, they need to be aware that there's a lot of businesses in Canada that are making more than 2 million in revenue. Based on this data, there's in between 30,000 to 40,000 businesses that are fairly large and can get acquired. Now, the question is, how many of these businesses will sell? So that number is not estimated correctly by ChatGPT because we've been in the space and we know the space way better than the data here. And we've done a lot of deals and we see how many people typically will go to sale. And it's typically between 1% to 5% of these businesses will sell in that particular year. So if you message any of these companies right now today, what you're going to find is in between 1% to 5% of these companies will consider selling for the right terms and conditions and the right purchase price. What it means for you is if you would approach enough businesses and build enough relationships with people, you would have a lot of investment opportunities. So then you would need to find the capital to be able to get into these opportunities. So this is what this really is. So this is a very clear opportunity that most people don't see. And the reason for that is because startups are popular, getting into crypto is popular, or something else is popular. This is not very popular, but I could tell you that this is how a lot of people build a lot of wealth very quickly. And I'll give you an example. If you go to our website, acquisitions.com, and you go to this particular tab called Impact, you're going to be able to see me interviewing different clients, and you're going to be able to see how different people acquire different businesses in different countries and different geographies, different sectors with different business experience, which is proof that this actual process is going to be working if you put in your time and your capital into it. There's literally hundreds of acquisitions happening right now as we speak, and most people are completely unaware of this whole thing. Um, Now, of course, you need to have there's certain requirements. Not everybody can get into the space. I can't tell that I can't say that this is a business model for every single human being out there. You need to have very high goals. You need to understand business. You need to have some contacts, and you need to be highly driven. Otherwise, you're not going to really going to be able to go for this because there's a lot of moving parts when you're dealing with an investment. This is not investing in the stock market. This is not building up an agency. This is not any of those things. It's a lot more complicated, but at the same time, it has a way bigger reward. I'll give an example. We had a guy in the network that up to date, he bought 15 businesses. He's like above 40 million in revenue, close to 15-20% profit margin. He done that in 3 years. Building a company of 40 million revenue, if you look at the stats in 3 years, um, it's not very doable in most cases. Nobody can do that from scratch. It's very difficult. The probability of that happening is very low. And we have dozens of people that get into the process with us and get to buy two, three, four, five, seven businesses in a span of 1, 2, 3 years. It's because they're following a process of building up wealth through a strategic opportunity. This is nothing new. It's a very old path of a lot of people getting into business, and buying businesses is really the way to build up a lot of wealth and a lot of like active income or active cash flow. A lot of people ask me about, but what if you go and buy a business and it completely tanks? There's no profit after that. It just goes down to revenue, goes down to profit. Well, that can happen in any business model. You can start a business and then it can tank, and then it could drop in revenue because of a market, because you can't get more clients or different reasons. So that's up to you to continue to optimize the business, to continue to add value so that it increases in value and increases in revenue, increases in profit. That's up to you. It's not up to us, right? Now, you also need to understand the stats around default rates. A lot of these acquisitions are done for getting a loan or getting some sort of capital or getting some sort of debt in the deal. If you're getting debt of a deal, you need to look at default rates historically in these markets, because this is a very good indicator of how successful people will become doing this later, not when they close the deal. So, for example, if you look at US and you look at default rates, you can clearly see the default rate for leverage loans has increased to around 4.5%. The reason this has increased is because of higher interest rates, inflation, and different issues. However, 4.5% compared to your failure rate in a startup is not even comparable. You can't compare these numbers. These numbers are extremely low compared to the failure rate in any other business model out there, right? So what it means is if you bought into a business that's worth $5 million dollars and you put a loan of a deal, you maybe got an SBA loan in US or you got a different kind of loan in Canada. What it means is these buyers that have got approved to get a loan, typically 96% of them, or in this case, 95.5% of them, have paid the loan in that time frame, which means they've been successful. They didn't fail. That's what it means. So if you look at a lot of different sectors, a lot of different business models, that's not the stat you're going to see. You're going to see stats such as 50% of people failed, 70% of people completely failed. They didn't have anything, right? After that, after they got into the business model, they wasted 5 years of their life and then nothing happened after that. So you got to understand these numbers before you risking your life or risking your wealth or risking your time. Same thing in Canada. If you look at numbers in Canada, um, you're going to be able to find that based on the fiscal year in the US is 369 on the SBA, and based on Canada, which the Canada has the Canadian Small Business Financing Program, which is very similar to SBA, just in Canada. That default rate is going to be in between 3.5% and 4%, which is actually even lower than US, which should give you some idea of how big of an opportunity this is in Canada, right? Versus US. So it's actually even way less risky in Canada. And what's interesting in Canada, there's way less even buyers in Canada than US. Even though you can see that there's less businesses, there's way less buyers. So which means it's still the same opportunity, roughly, right? So this is what you got to understand. Default rates and how many businesses exist and the fact that they're going to sell. And if you understand how to find them, how to talk to them, how to get capital in place, how to get investors in place if you don't have liquidity and credit, you can close a lot of deals and build up your net worth up to hundreds of millions of dollars. This is what our clients have done. Last 6 years, we've done hundreds of deals. So just be aware that this is definitely an older business model. It's very boring because you're getting into these boring businesses like an air conditioning company, a plumbing company, a landscaping business, a construction company, medical device business, an agency business, a staffing company, a cybersecurity firm, an IT-based business, a software as a service business, software development company. Anything you can think of, you can get into by using this process. As long as you're smart about it, as long as you know what you're doing, you surround yourself with good people that understand the space, and you have access to liquidity or capital or contacts that have capital. So this is it for this video. If you have any questions, just directly message me on Instagram and let me know what you think, or let me know if you want to get more information on how this works. Thank you.